Good morning, everyone. Welcome to the first presentation, I guess, for the session of the Pre-PDAC Red Cloud events. So EDM, for most of you who know us by now, EDM, Explore, Develop, Mine. We have exploration projects in Nova Scotia, which we believe will kind of advance to development stage. And importantly, we have the M, which is the mine. And so I'm going to go through today in the 15 minutes about EDM in general, and of course, what the mine is and where we are in stage of advancing that project to production. As usual, the forward-looking statements, I won't go through those, but they're on our website, and of course in the handout materials at the conference. As an overview, in the last 3 years, we've transformed essentially a company that's been quiet, mothballed project in Nova Scotia to an inordinate growth in the last 3 years. We're of course listed on the exchange, on the venture, and we now have a permitted and financed mine to commercial production. We got that in place last year. Zinc, lead and gypsum. Of course, zinc is a critical mineral. And so we're right on that growth phase in terms of the uses of zinc. It's going towards batteries and things like that. As you know, lithium is getting pretty expensive, and those alternatives. Zinc is also another alternative, and it's also used in industrial minerals. So it's a growing product, if you like, in the industrial market, and we think we're right on the peak of that, or growth curve of that, if you like. We've done a number of pre-feasibility studies on the Scotia mine, and all of them are around about 174 million or above net present value. With commodity prices today being much higher than our PFS work, and even discounting inflation, the stability of this project is great. It's very robust. So we're working very closely with our partner, our finance partner, who's financed the project to commercial production. And so, of course, that's a very close relationship and very satisfying in terms of building the project to commercial production, which we plan for to start in January of next year. Of course, when we start the near-term production here, the free cash flow is 5 to 7 million per quarter for 14 years. So it's a long mine life with a very strong cash flow, very robust, and the company is currently trading at 10% of NAV, which is a considerable disconnect between, of course, the net present value and then our share price. So like most other juniors, I think, on the marketplace today, we're undervalued, and I'll go through some of the reasons why that's the case. Our projects in Nova Scotia are just the mine here is close to the airport in Halifax. It's very close to the centre of, or downtown Halifax is about a 40-minute drive, and we're surrounded by other projects. The other red projects here the red project here and here, they're our prospects, which we are going to work on this year with some flow through. So logistically, very well positioned. Nova Scotia has been a great province to work with, and of course we have a permitted mine. A bit of an overview of the mine. Most of this foreground here is land owned by the company, owned by Scotia Mine or EDM. And here's the access road. You can see it's built. We have a very large mill, a very four-story mill in good condition. We have offices, and the new pit development, all open pit mine, is going to be in this area here. So it's as I mentioned, a 14-year mine life. It's basically permitted for half of that, so the first 7 years. So we have plenty of time to permit the additional 7 years, and so it's a great position to be in. That first 7 years, we make about $750 million. So over the 14 years, we kind of double that. So it's a good little earner. Very low cost mining cost, about $2 a tonne, processing about $14 a tonne. This is pretty much proven, pretty much standard to other operations in New York. Some of the other our comparables in terms of the operating costs are right on. So we're very confident that a low-cost mine And as you see there, it's built, tailings dams permitted, waste dumps, access off all-season highway road from in the province. Our path to production is very short. For a 14-year mine life, all open pit operation, conventional mining, it's 10 trucks, a couple of excavators, dozers and graders and so forth. Processing is crushing, grinding, flotation, dewatering. Most of that equipment is already in place, built in the mill. All we're doing is part of our path to production is upgrading that equipment, putting in a new crusher. We're not changing the processing, we're just changing the equipment to modern equipment. The finance is in place for 24 million, and that's a 100% offtake on the zinc, lead and gypsum for that 14 years. And commercial production, we expect to declare that in 2024. We've always said that from the announcement we're going, we have about 9 months to 12 months to just finish off everything. And the process is slow in Nova Scotia, like most wells for permitting, but we basically have finished that process now. And so, but we always give ourselves enough time to make sure that we can meet our construction targets. So right now, and we announced yesterday, the current timeline with equipment of delivery of equipment, mainly haul trucks, that's scheduled for December this year, and then production to mining to start in January. As I mentioned, the free cash flow is pretty exciting here, about 20 million in the first year alone, going up to 40 million. So it's a pretty good cash earner over the 14-year period. I won't go through this in detail, but pretty standard mining operation, processing, payables. Of course, the life of mine strip ratio is about 7:1. Most of that material is free dug. It's in the deposits, about 66% of it's free dug. So it's a pretty low cost operation, which means the economics is also quite robust. We only need $30 million capital. That's now been funded by the offtake partner, and so we're basically just working through the last bits to cement the timeline for production. Finally, I guess in terms of the commodity, we see zinc prices increasing, certainly as a critical mineral. We've seen that trending back over $1.50. Our PFS was done at $1.22. So you see that there's plenty of room in there. Lead is trending around about $1, and gypsum keeps on increasing in value, in price. So, as I mentioned, industrial use, wallboard, drywalling compounds, so forth. That's also increased partly due to inflation and the drive for industrialisation and getting the economies going. So we see the gypsum also to increase in value, which goes directly into our bottom line in terms of revenue. And the exchange rate. We see the exchange rate sitting around about 74, 75 currently is. So we've basically financed to commercial production right now. The upcoming catalysts. In 2024, we're ramping up to 1.2 million tonnes of mining production per month, ramping the processing up to 27 tonnes a day, 2,700 tonnes a day, and commercial declaration is expected to be in Q2 next year. Our capitalisation, one of the reasons why our market cap is around about 10 to 15 million, so it's a huge disconnect between the value of the project, is because we only have a small amount of shares outstanding. 20 million shares, very thinly traded. We haven't done a lot of financing. We announced one the other day, and I can't talk specifics about that right now, but that basically completes our financing for the rest of this year, and as we announced in that financing, that'll push us to the final bits of commercial production. That is in the time remaining. I think we're almost got a few minutes left to go through some of these things, but you see the mill there, it's built. All we're doing is putting some new equipment in. For the $30 million that's financed by the off-taker, we're spending roughly $17 million on upgrading the equipment. So new crusher, new flotation circuits, new pumps and pipes and so forth. So once we complete that, it's about 17 million, then we expect this to be very stable, 2,700 tonnes a day throughput, and as I mentioned, that cash cow of $5 to $7 million a quarter. This is a new table we've been talking about a little bit in terms of the disconnect between EDM, our market cap, is being 0.1 of NAV, and the other developers in this range. So in this range between 0.4 and I guess 0.8. So there's a real disconnect between the value of the company in the marketplace compared to our peers. So some of the work we're doing, as I said before, we expect to make an announcement fairly soon, we hope, on when we're going to cement that timeline. And we've said to the market that Q1 is our plan to line up all the major contracts, lock in when the equipment can be available on site, make sure all the government's happy with the pit design, the permitting, and that takes time. So we've always said that 9 months from that announcement, then it will be in commercial production. So we figure that the announcement of that will put us closely in this range here. So of course we're working hard on getting to a position that we can make that announcement. Things seem to be lining up in terms of the equipment supplies, in terms of the capital markets are getting better, in terms of the condition precedents we have with the off-taker, which is many, and we're working through those systematically with some of our partners, and from insurance, from bonding, and of course through to availability of equipment. The pandemic, I think, and the effects of that have affected a lot of different manufacturers, so we want to be very sure that when we announce we're going into production, that we've got that locked into essentially the month. At the moment, we're planning that to be in January next year. And of course, going into production, we should be in this range here. So 1 to much higher in terms of NAV, which a company who has a market cap of 10 million to 14 million, and a project that's worth about 200 million, you see that there's a pretty good opportunity here for growth. The project's permitted, it's been built, and we're basically on the last stages of putting that into production and of course announcing that. And finally, I guess in the time available, Nova Scotia. Most of you have probably been there. It's got a pretty mature mining I guess skill set, workforce and mentality in terms of access to the markets, in terms of infrastructure, in terms of course the minerals are mined. So gold, most people know about St. Barbara, the operation just up the road from us. They're looking to be on care and maintenance, which relieves a lot of labour, skilled labour to us, and we're basically 50 kilometres away from them. So I don't know what's going to happen with those, but with that their timeline, but there's a workforce. And other than that, most of the people that we employ are from HRM, from Halifax area, so they can live downtown Halifax and of course work at the mine. And so these are some of the other operations near to us. So you see it's a very a province with very, I guess, stable mining understanding. A lot of exploration happening, a lot of mining operations, gypsum, gold, as I mentioned, and of course us right in the centre of that. And that's pretty much it. A lot of technical information. You can see that that's the flow chart for the mill. Most of the equipment has actually been built, and all we're doing in terms of the funding is putting new equipment in place to make sure it's reliable, has a warranty, that it can achieve its minimum production of 2,700 tonnes a day. And I think that's it, Taylor.
Great, thank you, Mark.